Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, daily chart. We'll start here. You see the green line. I'm going to zoom this in one. That's your 20-day moving average, simple moving average, your middle Bollinger Band. It's the baseline assumption that we make in our room as to whether or not we are sell rallies or buy dips. We've engaged it 6 of the last 7 sessions and 8 out of the last 6 of 7, 8 of 11. So it's getting a lot of involvement there on the chart. The blue line there is the 9-day. So Friday they really ran it. They took off, bell rang, straight up, off it goes. Kind of, similar to Thursday, although not as strong. Then they brought it back in. And what we're still seeing is when the bulls get up to some of these areas, the bears do step in, bulls take some profits. It's still very two-sided during the day, but now with more of an upward slant. You have a new weekly pivot at 41.3275. That coincides with the blue line there, which is a 9-day. I mean, I really, what I would say to the bears is you got to figure out 2 things as soon as possible. You've got to start trading back again on the other side of the daily mid-band like you were middle of last week. Then you're going to have to figure out weekly pivot and the 9-day. If you don't, there's one of a couple of outcomes. Either we keep kind of trading on either side of the middle Bollinger Band, but we're not really going to head lower. Or the bulls, and their problem is, this segues into the bulls' problem. The bulls look like garbage above 77. So you get to this pre-FOMC price, 41.77. They tried again on Friday up to 85. It proved to be very nice resistance back on Tuesday. And they wanted nothing to do with it over the course of 4 hours last night where they really started to lift price. So they gapped it down. It stuck in the low 40s. We ended up getting long 48, 49, 50 area for a nice trade to open the week. So we're just kind of we're sitting here. We took runners for 20 at 70, and now we're just going to wait for the bell to ring. But that's because both sides, and it ends up being a nice trader's tape. I'm not complaining about the tape. Tape's fantastic. For what we do, the tape is absolutely fantastic. The bears can't extend the range to the downside. The bulls can't extend the range to the upside. And now we had this move down. Now we're back over here when we were consolidating. We're back into this 47 to 77 range again, right? And that's 30 handles. That's plenty of elbow room to get done what you need to get done as far as hitting your numbers for a day. So off the open today, you've got the hourly mid-band at 62, volume weighted average price going on 63. It'll be 63 by the time we open. Daily pivots at 63.25. Proprietary moving average 5-minute mid-band between 70 and 71, which is where we opened on Friday at 71.5. So, bears convert these, and the daily mid-band is right under at 59. So 59 to 61 is a big deal. 59 to 61 is a big deal. I was looking for a 61 print Friday morning. We ended up getting more than that. It wasn't easy to find, but we figured it out. So heading back into that 59 to 61 area this morning is not out of the question. The bulls very much need to take out the highs from Friday. I think if they do that, you're going to have a lot of people take their ball and go home, at least for today, and that'll probably get you a solid look at the round number up at 4,200. All right. Have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.